Missile test by North Korea. All Asian markets were trading in red today, including Sensex and Nifty. Those Sensex, we can say that closed down by over 300 points, while Nifty was down by 100 points, most in this year so far. So heavy selling pressure was seen in both markets. Asian markets were also closed today. They were really not in a good shape, and Asian markets, they ended in red, including all the big Asian markets. They ended in red. Over there in FTSE in London, the markets were down 76 points. CAC also down by 65 points. So clearly not a very good day for markets as far as global and Indian markets are concerned. And overall, the markets are giving a bad news to investors. Yesterday also they were flat or they were red, and today also they were down, mainly spooked by North Korea's missile test. So geopolitical tensions are back to big concerns of the market. To talk more on markets, we are joined by Mustafa Nadeem, our analyst for today. Good evening to you, Mr. Nadeem. First of all, how do you see the trade happening for the rest part of the week?
I think this correction has given a significant formation of bearish belt hold, and I think the market would be correcting some more. And we can see market going towards 9685 levels in tomorrow and day after tomorrow session. So if you see the significant call writing can be seen at a levels of 9800, 9850 and 9900. So which also suggests that the bears are having a tight grip on the market. India VIX, if you see, is also trading at 13.5. It took a 7% jump today. So all these factors are showing that now the bears are having the firm grip on the market, and the market should correct to level of 9685 going forward overall.
And about the certain sectors, Mr. Nadeem, any good sectors in which are good picks from the investors' point of view still?
I think in this time, the defensive sectors should only be looked upon. Otherwise, all sectors are prone to the decline. So FMCG is a sector which can be looked upon in these tough times where the markets are correcting so sharply. Other than this, investors should avoid their bet on the sectors which are more prone to global factors.
And earlier there were expectations that Indian markets can touch record highs once again. So Sensex can touch 35,000 by the end of the year, and Nifty will also touch close to 12 to 13,000. Do you think that is possible, still possible?
Yes, that is very much possible, and I think these kind of corrections are giving strength to market, whereby we can see some more build-up happening at lower levels. So overall, the story is intact. These are just short-term hiccups because of geopolitical reasons, and there are no such important data which are lined up. So the markets are reacting negatively to this. Overall, if you see the short-term and the long-term story, the things are intact, and we may soon see higher levels in the market where it may touch to a level of 35,000.
Thank you, Mr. Nadeem, for talking to us and getting us all these details. Definitely not a very good news for market, not a very good day for market. In fact, they were spooked by big thing, which was North Korea's missile test. And staying with Indian story, once again, India, the world's biggest sugar consumer, has imposed inventory level limits on sugar mills in an attempt to keep prices under control during the upcoming festival season. Sugar mills will not be allowed to hold more than 21% of their output in stocks by the end of September, and they have to bring down stock level to 8% of output by the end of October. The measure is aimed at preventing mills from artificially withholding sugar in storage in order to push up prices during the high demand festival season of September and October.